The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed. For a full list of current recommendations and stocks owned by staff, members of Intelligent Investor can visit www.intelligentinvestor.com.au.
Welcome to Stock Take. My name's Gaurav Sodhi. Today I'm joined by a special guest, the CEO, the Chief Operating Officer, the head of our Vancouver office, Graham Whitcomb. Welcome, Graham. It's great to see you back in Australia. And also, James Greenhouse is also here. Hey, James.
Hi, Gaurav. Hey, Graham. Great having you in the office.
Usually it's great to have JG around, but when we have someone like Graham in the office, which only happens a couple of times a year, for those who don't know, Graham actually works out of Canada. And he's only in the office rarely, so it's good to have you around. Graham, while we've got you here, I want to pick your brain about Tabcorp, which is a company we've been following for some time, but we've never actually upgraded before. And in fact, it's a company that's provoked you to change your mind to some degree. I like this idea of looking at a business for a long time and slowly being able to change one's opinion about it. What is it about Tabcorp that got you thinking, and how did you change your opinion on it?
I've been following the company for a long time now, at least 10 years. I used to work in their offices, though for a different company here in Sydney.
From gambler to investor, I like it.
Yeah. But I used to be very against the company. I really thought it was going to... it just didn't have a place in the future. Mm-hmm. Because... it was stuck in this kind of brick and mortar existence where it had the typical tab shops that you would see around, where these online competitors were popping up everywhere that were offering much better odds. And it just seemed to me that because of their business model being such a lower cost compared to Tabcorp, that they were just going to just win very easily because it was always a better deal to go to the online guys. And that did kind of play out for the first 8 or so years that the online operators, Sportsbet in particular, Betfair and some of the others, took a huge amount of market share from Tabcorp. However, a couple of years ago, things started to change, and it did take a while for me to completely flip. But I started seeing the trends not completely reversed, but really slowed down in terms of the loss of market share has now completely evened out. There was the merger between Tats and Tabcorp, which had a big benefit in that because there was so much overlap in their operating expenses, they were able to reduce their operating expenses a lot, which could then be paid back to punters through lower odds. So there was that disadvantage they had against the online operators was then starting to be eroded. Then earlier this year, there was point of consumption taxes, and there were just a few different, which I should say, disadvantages. Or it creates an advantage for Tabcorp now because it used to have to pay taxes in each state versus just a single tax for everyone now. So the online operators used to work in Northern Territory to take advantage of this lower tax, whereas Tabcorp would have to pay for every state it was operating in.
My understanding is the lotteries business is the best business, but what you're mainly talking about here is the wagering business. And so, I mean, I saw that the pro forma earnings for 2019 are still falling. So what's going to change about the wagering business in the future there?
For the wagering, so you're right, that the lotteries, I tend to think and talk a lot about the wagering business in the reviews that we've written, but the lotteries business is this... it's a monopoly that's an extremely strong core, but because it's so stable and relatively easy to value in the sense of having very stable cash flows, it can almost be forgotten to some extent that you've got half the business is just, it's going to be there, it's going to do fine over time. The swing factor comes almost entirely from the wagering business, so that's where it gets the most
That is so true. Just as a general point, as an analyst, we tend to focus our time on complexity and difficulty, not necessarily on importance. I find myself doing that all the time with big conglomerates. I focus on what's complicated and unknown and not necessarily on what's important. You've got to sort of pull yourself out and do it.
That is very true. It does have a kind of mesmerizing effect.
Yes,
All of
that's
the
right.
movement, all of the changes, you're like,
Yeah.
oh, what's going on here? Whereas the lotteries business is this set and forget, very
Yep.
boring monopoly for 50 years, and you don't have to think too much about it. A ham sandwich got operated, as Buffett would say. But anyway, on the wagering front, yeah, that does take a lot more of my attention. But also, it's where the changes are happening. And so, where Tabcorp used to have this big disadvantage there, it's now slowly starting to improve a lot. And you can see that those trends are working in its advantage. They're not kind of theoretical, because market share losses are going down. The ratio of, market share losses, did I say? The ratio of kind of marketing expenditure to revenues is declining, which for the past 8 years it hasn't. It's consistently gone up because they've been kind of desperately trying to get their footing back against these online operators, and market expenses tripled basically over 8 years, whereas now they're starting to decline again. So in terms of where their earnings are going, to get back to your question, in terms of where earnings are going over the medium term, next year they may decline slightly or stay roughly where they are. But if marketing expenses continue to decline because they've now established their oligopoly online with Sportsbet, then that would be a big boost for earnings. The rest of the savings coming through from the merger with Tats, the bulk of those are still to come. So there are a few different things that are leading to what we expect to be higher earnings at least a few years from now.
So are they going to actually be closing these stores? Or has that already been happening? Because I mean, I must admit, I wonder who goes in the tabs anymore. So I mean, that seems to me an easy way to save money. But are the stores a competitive advantage?
They are, in the sense that there are a bunch of people that still do value going to the store. That, especially with older age groups that aren't using the online or haven't seen the advantages of online, they still like the fun of getting up on a Friday and going into the store. So I don't think they're going to disappear anytime soon, but you would expect that as more and more, like every single year, the turnover moves away from the on-track and stores and towards online. So it makes sense that if you think 10 years from now, by far the bulk of their betting turnover is going to come from online apps and there are other platforms on the internet, that you would expect that they're going to be withdrawing some of their stores because they'll eventually become unprofitable.
Graham, let's talk about the lotteries business for a moment.
The gambling business.
The
Yeah.
Thank you. Yeah. So this is clearly the best part of Tabcorp, and this is the big reason why we're interested in the stock is really the economics of this business and the way the online portion is growing so strongly. There's been some discussion about them potentially even splitting lotteries from wagering. The company has denied all of this and said they're not interested, that there are synergies involved. Do you see any synergies between those two groups, and how do you rate the chances of actually extracting the lotteries business out of Tabcorp?
Yeah, from what I can see, there aren't really any synergies between
I don't see it either.
the lotteries and the definitely combining Tats and Tabcorp's wagering operations had a huge advantage.
Yeah.
But lotteries is just kind of tagged on. Even though it's another gambling company, it operates very, very differently, has a different business model, different kind of regulatory setup. So there's not really any overlap there. But what it does provide to Tabcorp is a very stable base that it can then use to just create this nice stable cash flow that then they can cycle back into the wagering business with a lot more stability and kind of a long-term outlook compared to their competitors who are having to do, well, they're not having to think short-term necessarily, but because earnings are much more volatile in wagering, it does change how you would allocate capital, basically.
Yeah, I think that's true. But in doing that, I think it means that you're never quite realizing the value in that lottery business because the cash flow is being reinvested at variable, uncertain, and often low rates of return. Whereas if that was a standalone business, the cash coming out of there, I mean, that could justify really big valuations. And
Yeah.
I'd be more interested in a lottery business standing alone rather than one that was attached
Yeah,
to wagering?
as an investor, I would definitely prefer that as well, because you've got this phenomenal business that, if it was standalone, it really would be a set and forget type of stock, whereas combined with wagering, it requires much more constant attention. But in terms of them actually spinning it off, I can't imagine it would make much sense for management to want to do that, because it takes so little attention compared to the rest of the business, but has such a disproportionate amount of cash flow contributing to it. I can't imagine management would be particularly eager to get rid of it, because they know that it's an extremely valuable and highly valued side aspect of their business. And I don't think it would really create much distraction for other companies that have all these different operating segments. It might be very distracting, but I'm guessing that it doesn't in this case.
It just seems like a way for management to make their own jobs easier by having the lotteries business there.
think
It's
so.
effective subsidy for the wagering business.
Exactly. If you think about just something basic for the CEO's pay, where if he's being compensated based on the size of the company, what earnings are, if you've got this one side of the business that doubles the profit of the business,
Without doing
of the
anything.
overall company, without requiring 10% of your attention.
Yeah, Mr. Ham Sandwiches does all.
Yeah,
the-
exactly.
yeah.
It makes sense to hold on to it. And I don't think there'd really be any particular advantage of spinning it off. You mentioned maybe the extra focus would help it out, but I'm not sure that it would, because lotteries is so heavily regulated.
Yep.
And it's kind of maxed out in terms of it's not really a hugely growing market or anything. The people that are there is a consistent trickle of new players, which is making turnover grow at around 4% a year. But it's not it's something that's been around for 100 years, so it's not as if it's some new market that they're penetrating and growing really quickly in terms of users or anything. So
Although the online segment is growing strongly, and they're actually giving away a lot of margins to Jumbo. Take Jumbo, for example. That's a $1 billion business that really should, all that margin should be Tabcorp's by right. You know, they're sort of giving that away. And I think a more focused business might actually look at how to capture that margin and internalize it.
I completely agree with that, Gaurav. For me, I think that it's actually wrong for these businesses to be together, and partly because you don't want a very, very strong business in the lottery subsidising a weaker one in the wagering. And the thing about, I'm a big fan of focus, and if you have two businesses stand on their own 2 feet, they tend to find, rather than they're sort of being subsidising between the two different divisions, the lotteries could find ways to improve its business. And as you say, Gaurav, there might be a more focus on cost cutting or whatever to do it. But also, I think the wagering business probably is actually best if it stands on its own 2 feet, because if otherwise you get there's this. It's like this backstop. The lotteries is like this backstop, provides the cash flow if anything ever goes wrong.
Yeah, that's
Whereas if the
interesting.
wagering business stands on its own, you know, it can. You have management very, very focused on it and devoting all their attention trying to grow revenue, cut costs, that sort of thing. At the moment, it's sort of like there's
they
a
have this
backstop.
safety net.
Yeah, safety net. That's right.
Yeah, that's a good argument for it. Definitely, the losses to Jumbo are interesting in that Jumbo just did online marketing much better than Tabcorp, essentially. Whether that'll continue isn't certain, because Tabcorp is definitely able to grow its online lotteries, or it has been doing very well over the last couple of years compared to Jumbo. But that does lend itself to saying that Tabcorp hasn't been particularly focused on it. If it's not really a competitor, but a distributor could come along and take some of their margin. But they're obviously doing something slightly better on the marketing side too, which is expanding the potential players for Tabcorp. So it's a symbiotic kind of relationship. But yeah, over time, I would expect if Tabcorp continues to do well with their online marketing, to take the business back from from Jumbo.
The other quick point to make about Tabcorp before we finish up is that it's one of the few big blue chip businesses that offers a 4.5% fully frank yield in an environment where you're probably getting less than 0.5% on a savings account. So it's I think there's a case to be made for conservative investors taking another look at this business that maybe in a higher interest rate environment we may not have looked at. It probably makes more sense now today than it has in the past.
Yeah, and that was the point that I made in the last review, is that the changes in interest rates do make a huge difference. That if interest rates were to double from here, then Tabcorp, the kind of stable cash flows from the lotteries, none of that is going to change too much with the interest rate. The only thing that's going to change is the valuation. Yeah. So if they double, then it probably isn't a great buy from here. But if they stay where they are, you're getting this 4.5% yield compared to what you're getting in a savings account, which isn't directly comparable, but that's still a much better business compared to most, and you're getting a below average valuation. So that's a pretty good deal.
Okay, let's leave Tabcorp there. There's more information on Tabcorp on the website, and of course it is on our buy list, and I think it's in our portfolios as well at the moment, isn't it, Graham?
I know it's in mine.
All right, now I got a question for you guys, actually. So if I asked you what the biggest business in the world is, without looking at the cheat notes, Graham, what would you say? What would the answer be? Apple?
Yeah, you think about all of these businesses that are already listed, you kind of assume that it couldn't be privately owned.
JG?
Yeah, and I knew it was Aramco because it was
okay.
too big in there.
Yeah, so JG, all right, so the world's biggest business by a long way, is Saudi Aramco, the national oil company of Saudi Arabia, which I think it struck oil in the 1930s when Shell happened to be drilling in the area. It got nationalized after all this conflict later on, and it's been the world's largest producer for decades. It has the lowest extraction costs, said to be in raw cash terms about $2 a barrel in terms to extract oil. And after you add in all the big facilities and the depreciation, it's said to be about $20 a barrel, which is still really competitive, even in an environment of sort of $50, $60 oil. So no one comes close to the cost or the volumes that Saudi Aramco is able to generate. And attached to all the oil production, there are gigantic processing facilities. It's in its own right, it's a major chemicals business as well. So this is a huge international business, by far the biggest oil business in the world. I think if you took the top 5 listed oil companies in the world, it's like twice the size or 3 times the size of that combination itself. So it gives you some idea about the scale of this company. We're talking about it now because Saudi Aramco has now decided it will it will list some of its shares on the Saudi Stock Exchange, which I don't even know what the name of that is. and later on it might actually list them in London as well. But for the valuation being talked about is sort of $2 trillion, between
It's
$1.5
a very
and
small
$2 trillion.
IPO compared. It's only 1.5% of the shares,
Yeah.
something like $25 billion, which sounds a huge amount of money, and yet it's a tiny proportion of the company.
That's right, it's a tiny book. Yeah.
So, who actually owns this business?
Yeah, this is not an easy question to answer. So, on paper, technically, it's owned by the Saudi state. But if you ask the next level question, who owns the Saudi state, it's the family. So the business is actually, in practice, owned by the family. And this is why I think it's kind of interesting, because here is a business that, notionally, if I had to pick what one of the best businesses in the world would be, I'd have to say it's got to be Aramco. I mean, this thing makes $100 billion of cash flow every year on modest oil prices. If oil were being disrupted, these guys will be the last people standing. They have hundreds of years of reserves and are likely to have decades of profits in production left. This is a wonderful, actually really, really good business with unsurpassed competitive advantages in terms of cost. I would not touch it at any price.
Yeah, this is so that 25 billion or whatever is, I presume, it's read that's going to the Saudi sovereign fund, but I mean this is not like the future fund in Australia, is it? Where that's going to go to pay public servants. I mean we don't know really where that money is going apart from to the royal family or the Saudi state, or so you have to worry about what that means down the track for this company and how they can operate the company down the track. This is not a sort of a company like Apple or Amazon, which is sort of subject to long, which is owned in a sort of where the rule of law applies.
Yeah.
You've got to be quite careful about that, I think.
Yeah, you're quite right. The cash flows from the company have traditionally gone straight into the finances of the state, and in fact, something like 70% of the entire Saudi budget derives from Aramco itself. I'm not sure whether that's through taxation, grants, or equity, or dividends, or how that's allocated, but I do know that it's sort of 3/4 of the Saudi budget comes directly from Aramco. So this is a company that exists to fund the lifestyles of the family and to fund the functioning of a state. And I just think that when we're valuing a traditional business, say Apple, something that's huge, that generates plenty of cash flow, we will take that cash flow and value it, because the assumption is that cash flow belongs to the owners of that business, the equity owners, and at some point we can get our hands on it. Those fundamental assumptions cannot be made of Aramco. We will, as a minority owner, and JG's right, it's only going to list sort of 1.5% of its shares. You will never see that cash flow. You have no real legal call on it. It's run for the benefit of the state and the family. And this is one of the few businesses I would not buy at almost any price, along with some Russian oil businesses as well. So I just thought that was interesting, that here is a business that, in theory, is arguably the best business in the world, being offered as an IPO, and yet we're a bunch of value investors sitting here saying we wouldn't touch it at any price. So,
I think this is interesting, though. Maybe if they were selling 70% of it, which clearly,
Yeah.
the market couldn't absorb $1.5 trillion worth of stock. But I mean, if they were selling that and giving up some control, but they're not giving up control.
I think even then, though, these are the ultimate insider shareholders, where they
Yeah.
not only own the company, but they set the laws that
Yes.
that govern the company. So even if they gave away 99%, if they could instantly nationalize it again and just take control, then it doesn't really matter what they sell. They set the rules.
Well,
There's
that's an
also-
interesting thing, isn't it, about nationalisation? I mean, there's other countries in the world which are talking about nationalising certain assets, and it is a quite interesting thing when you think about, as an investor, can your company actually be grabbed away from you at any time? And you do actually have to think about that.
Yeah.
I mean, even returning back to Tats and Tabcorp, I mean, Tats, it had its license for poker machines taken off it from the Victorian government. So I mean, that wasn't considered to be able to be possible at the time. So I mean, it can actually be a big thing as investors we need to consider.
Yeah.
That companies can lose licenses or can be nationalised if circumstances change.
If anything, it might be even an advantage in making it less likely that they'll nationalize it, because they're giving away so little, that 1.5%, that 1.5% is a drop in the ocean compared to the rest of their ownership stake and all the money coming in. So are they really going to kind of cause all this disruption and potentially social unrest just by getting an extra 25 billion? If you've got hundreds of billions coming in each year, then it doesn't really make sense.
For me, the concern isn't so much nationalisation, because I think you're right, Graham. That's perfectly logical, and I agree with that point. But the stated profit of the business is still under threat and directly controlled by the Saudi royal family. So you can imagine a scenario where oil prices fall or Saudi expenses go up. Remember, in Saudi Arabia, the state pays for basically everything. So people often do not work, and they don't have to pay for any of their own health, education. Nothing gets paid. Nothing is out of their own pocket. The state, and Aramco behind the state actually pays for everything. So you can imagine a scenario where oil prices fall or expenditures rise, and then all of a sudden, that $100 billion profit that you're recording on your income statement suddenly doesn't really belong to you anymore. The taxes go up, special levies are charged. I think the function of this business is not only to produce oil, it's to make the state function, and that is what will dictate how much money you as a minority shareholder get out of it. So there's just so much uncertainty about getting access to the money.
Yeah, that's a good point, in that you hear about in normal listed companies, this idea of stakeholders, where management is answering not only to the shareholders but to the local community and to this and that. In Saudi Aramco's case, they're 100% answering to the Saudi citizens, because they know that if they upset them, then they're out of power.
Yeah.
So
And
the
probably
shareholders
dead.
of Saudi Aramco, their little 1.5%, they're not even on the radar compared to the other stakeholders that they're considering.
But the other point you raise is interesting as well, Graham. I mean, these are the ultimate insiders, and the very fact that they are selling a stake in this hallowed business, which is still a really important institution in Saudi Arabia. Knowledge about reserves and production in Saudi Arabia is a state secret. So no one actually knows the real reserve status or how production is allocated between fields. There's one field in Saudi Arabia called Guahar, I think the name is. It's the biggest oil field in the world. It accounts for 50% of production. We don't even know how many reserves are left in that field. If that field is depleted, then the entire Aramco production base is weaker than we think. So that's just to say that these guys have a lot of information that the public does not have access to, and the fact that they are selling now might say something about oil's future. And it's really got me thinking about, we have Woodside as a buy. I generally quite like oil stocks. I've made money from them in the past. I've recommended them in the past. But this has got me thinking, what signal is this sending about the future of oil? I don't have an answer.
They're just doing it for strategic reasons. If you get, because it's mainly going to be Americans buying it probably, if you have a bunch of the American public owning a stake in Saudi Aramco, then you know that America is less likely to put an embargo or whatever on the country, even though they're an ally, but it would remove some risk politically, I imagine.
It's just something that's on my mind a little bit. I'm thinking about it, and there'll be more reading and thinking to go, but no change in recommendations so far, mainly because the buy we have in this space is Woodside, which is an LNG producer. LNG is a generation fuel. Oil, petroleum is a transport fuel. Transport's really what's at risk of being disrupted here. LNG demand is still rather strong, and I don't see any real disruption risk at this stage. So Woodside stays on the buy list.
I wonder why Aramco hasn't bought other companies. They could presumably buy Woodside in a day's earnings.
Yeah.
I wonder why they haven't expanded offshore off their own.
They have bought refineries. They spend a lot of money buying refineries
in foreign countries,
all over Asia.
Ah.
So they own the biggest refinery in India, for example.
Oh, interesting.
And elsewhere in Asia. But that's interesting, that the expansion actually has come from non-oil generating fields and more towards processing. Anyway, we'll leave Aramco there. Let's take a quick break and we'll be back. JG, several years ago, you upgraded Woolies at $24, $25, and we fully expected that we were buying one of the best businesses in Australia, something that would be stable and growing for years to come, and pretty much peerless in terms of competition. How's that expectation played out all these years later? Even though we've made really good returns on the stock, has the supermarket sector turned out the way you had expected back then?
Well, this is an interesting thing. I mean, we thought about it in 2016 when we upgraded the stock and thought, because there was a lot of risk with the business, with Aldi and so on, and people were saying Aldi's going to kill them. So we thought about it, but we thought the price was at the time. But since then, I think what's happened is that the industry has started deteriorating a bit. And even though Aldi is, it's there, and certainly it's going to be a threat in the future. Kaufland is coming, Costco's ever present as well. So we know there are threats there, but the market's also changing in other ways, and probably in more important ways. And maybe for me, the biggest risk there is the consumer preferences change. And so, I mean, I've been a big fan of buying groceries online for quite a number of years now, and that is now the fastest growing part of Woolworths sales growth. So, but the problem with that part of the sales growth is it's much lower margin, and it's likely to be lower margin in the future. So there's just these, there's the growth of Aldi with it getting bigger, the growth of the discounter, other discounters coming in, and the change in consumer preferences. I just think these supermarket businesses are probably not quite as good as they once were, and that means we probably want to pay a bit less for them. So that just worries me that now with the prices up sort of more than 50, 60% since we upgraded it, plus dividends, we're now paying a much higher price than we did, but the threats to the industry have become, I think, more important and more worrying.
Have you seen those threats play out overseas? I know overseas supermarkets don't own anything like what ours own here. Are Australian supermarkets relatively sheltered from those threats? Are they more rampant overseas?
I think there's some case to say the Australian grocery market is just a better market for the incumbents, because I mean Coles and Woolworths between them have 70 billion in sales. I mean that's 70% of the grocery market. That's pretty concentrated and still is, despite Aldi having 10 billion in sales. It's still a very concentrated market. So it probably is a better market than the US and the UK. But probably there is in the back of my mind is the UK, what's the UK experience, and we know that during the GFC and in the period afterwards, people became more interested in saving money on their groceries, and so they went to the discounters like Aldi and Lidl. And unfortunately, what the Tesco and Sainsbury's and Asda and so on, the big supermarket chains over there, what they did is they basically just held their prices and refused to exceed any margin to those discounters, and it actually ended up being a very, very big problem for those UK supermarkets. So I'm just a bit worried that actually might happen here, and that we might see with these changing consumer trends, and with people being a bit more concerned about their hip pockets, that we may see a similar trend here, and it just means that that these businesses could be a bit weaker than what we think.
The valuations say something completely different. I'm shocked at the sort of multiples these things trade at. But the margins have also compressed a long way from where they were. And the businesses themselves are responding to strategic threats. One of the ways they're doing that, JG, is by shrinking to some extent. Woolies has announced a demerger. Talk to us about some of the responses and where the margins sit. And then let's have a little chat about Endeavour.
I think the demerger is almost a different. The demergers are almost different. I think that the reasons why the supermarket businesses aren't doing that, their margins aren't growing, are slightly different to why they're demerging. But sticking with the demerger, I think that it makes sense that, to me, it makes sense that you would demerge these businesses. As I said before, I'm a big fan of focus, and so I think a supermarket business is a bit different to a liquor business. I know they've been combined in the past, but the Endeavour drinks business, when it lists, if it does demerge from Woolworths rather than be sold, it'll own both the drinks business but also the hotels business. There's been a long history with people being unhappy with Woolworths because it owns poker machines as part of that Endeavour business. So it makes sense that they'll hive off the sin businesses, the businesses that own the drinks and these hotels, and they'll be. I think and while that's a good thing from a strategic point of view, it also makes sense in terms of that business being able to invest. So what I'd expect that Endeavour Group, when it lists, it'll probably buy more hotels. It'll probably become perhaps a more hotel focused business.
Double down on sin.
That's right, exactly, yeah. It may actually end up buying more poker machines because it'll be free from the capital constraints that have been put on it by Woolworths as a supermarket company.
Not just the capital constraints, but you can imagine Woolworths management probably haven't been all that keen to expand that part of their operations. They've just probably been running it on a standalone basis.
Exactly right. I mean, the most important thing after the 2015 price cuts that Woolworths put in, that slashed its margins that you referred to earlier, Gaurav, that's really what they needed to do was turn that supermarket business around. And so all the capital that Woolworths had was directed to the supermarkets business, and they pretty much let the hotels business and the drinks business, which were pretty good businesses in themselves, they let starve them of capital is probably a reasonable way of putting it. So under its own separate management and separate structure and separate listing, it'll have access to capital that it wouldn't have had under the Woolworths Group structure.
Now, when you say the drinks business, do you mean Dan Murphy's, or is this retailing drinks through hotels, or both?
It's both. So Endeavour Drinks, it's it's a surprisingly complicated structure, which I don't think the market knew about at the time. But it is Dan Murphy's, but it's also the BWS chain as well, and they have a lot of little smaller chains like Cellar Masters. So they're the main chains, but it's also the hotel businesses as well, and that includes drive-throughs and sales of liquor on premise in hotels, and then there's also the poker machine business as well. Will all be wrapped up in this Endeavour Group.
These are remarkably dominant businesses, James. These must be pretty good quality, and this is surely something we take a look at once the demerger comes through.
Yeah, I mean, Endeavour Group, if you're happy to own poker machines and drinks businesses, it will be a pretty good business. I don't think it's actually as good as a business as a supermarket business, and seeing I think the supermarket business is deteriorating, I think there's some risks there as well, because I think liquor is actually even more threatened by online penetration. But it's still still going to be a pretty good business overall. And so, yeah, we certainly will take a look at it. And I think what particularly I find interesting is the access to capital that the Endeavour Group will have afterwards. And it just means it'll be able to buy hotels if it wants. It'll be able to buy more poker machines if it wants. It'll be able to buy more bottle shops. It'll be able to develop the land that it has. So there's a whole lot of opportunities there that it hasn't really been able to do that it will be able to do under Endeavour Group structure.
Why do you say that the liquor group is at greater risk of online disruption?
I think because liquor is bulky. It's a bulky asset, so it actually lends itself quite well to delivery. Whereas people are generally, I think, more willing to go into a supermarket. They need to buy their avocados or their rocket or their tomatoes or whatever, and so they'll pick up a whole lot of groceries. Whereas I don't really see any reason why you need to go into a liquor store. To be honest, I think that a lot of that business at some point is going to go online, so it'll actually end up being probably greater penetration in the liquor business for online than in the supermarket business. That's my theory anyway. Very happy to hear a different point of view.
Yeah, I would agree with that as well. I've ordered liquor online a few times, and a refrigerated truck I've never had it cold, and I think that's one big thing. Whereas when I order groceries online, it 100% comes cold in cold storage, and it's a far more difficult logistics chain to grow and to sustain rather than a sort of a dry, warm logistics chain. And it's already boxed, so you can fit just more in the truck. I think there are a lot of ways. I completely agree. It just lends itself well to delivery. I was wondering about the regulations though, because I imagine the government, it wouldn't be thrilled to see piles and piles of liquor being distributed by mail, and there might be some benefit for big incumbents that way to prevent competition.
Well, that's an interesting point, Gaurav. I think there have been some miners buying liquor online and having it delivered. So yeah, there could be some regulatory threats around that.
Well, this sounds like a really interesting idea. I look forward to reading more about Endeavour. Just quickly on the dates, when are we expecting something to be done?
So shareholders need to vote on the first stage of the demerger, the merger of Endeavour Group and ALH in December, and just at the AGM in December 16, okay. I think it is. Okay. And then next February, the merger takes place, and then you'll need to vote again on the actual demerger next year. So probably there's not going to be much happening until maybe April, May next year on the demerger.
Okay, well, I'm sure we'll hear about that again. We better leave it there, gentlemen. Graham, it's great to have you on, and welcome back to our country.
It's nice to be here.
JG, as always, wonderful to have you as well.
Thanks, Gaurav.
For everyone else, thank you for listening.